Good afternoon, everyone, and welcome to Stock Market Today for Friday, August 8th. It's Alissa Coram here. And what a snapback this week. The Nasdaq back at new highs. We've got a lot to take a look at. And joining me now to discuss the action this week, and we've also got a lot of stocks to check in on, is my colleague, Ed Carson. Ed, what do you have for us today?
Yeah, we'll look at a number of stocks, but we'll take a look at Google, Apple, and AppLovin among them.
Okay, sounds like a plan. We will do that. But first, let's take a closer look at the major indexes and the action that unfolded this week. So, starting with Friday's action for the NASDAQ composite, the tech heavy index up 1% by session's close. So, a closing high here. Did we hit an all time high again, Ed? Looks
Yeah,
like we were.
I believe we did. I
All
believe we.
right. Good stuff there. So sorry, the S&P 500, meanwhile, up 0.8% on Friday. Not quite there, but still a lot of progress after the damage that we saw late in the prior week. Meanwhile, the Dow up 0.5% on the session. The Russell 2000 with a small gain up about 0.1%. So definitely a tech-led day, tech-led week here, Ed. Taking a look at the weekly action. Again, what a snapback with that downside reversal off highs last week. We were expecting potentially more weakness, but we know this is a very news driven market and a lot of big earnings movers this week, but just a lot of big cap tech movers as well.
Yeah, there was some positive earnings, like some big names like Palantir and AppLovin, Shopify helping the Nasdaq, and then there was some tariff news and other news that lifted chips. I mean, there was a lot of positive news for AI hardware. So those sectors are doing really well. And you look at this, yes, just it was a steady bounce. On Monday, the market had a real broad advance on Monday. It was a snapback. It really bounced back, and the Nasdaq just kept on going. But S&P as well to a lesser extent. So, but again, it's somewhat concentrated. The Dow did okay, and keep in mind is that Apple had a huge week. Nvidia also is in the Dow, so the Dow still has some pretty big names in there. This was probably Apple's best week in a year, at least. I'm not sure. I didn't do the math, but I just was looking. Wait a second, it's a 13% gain. That's a pretty big move for the Dow in there. So those things are going on, but underneath the surface, there was a little bit of after Monday, Tuesday, there was a little bit of sideways action, a little bit of resistance. I don't want to make too much of it, but RSP is like just it sort of popped and then we sort of just went flat. And again, there's nothing wrong with this. You can build handles this way, so it's not like oh no, the sky's falling. It's just that maybe the market isn't quite as strong as the Nasdaq would tell you. QQEW is unusually because uh, that was down for the last couple of days, hit resistance. It's really testing the 50-day line. So yeah, if it broke the 50-day line, undercut the lows of last week, I think that would be concerning. Right now, it's not so much. It's just something to note that there's divergence going on. But look, obviously, a lot of things are going right with the Nasdaq at record highs too.
Absolutely. And so RSP, QQEW, those two equal weighted ETFs, we like checking in on those as a signal for breadth in the market. But something I found interesting that Chris Gessel said on IBD Live this morning is if you look at past strong market rallies in the last couple of years, we sort of had the same issues. So it's can be a matter of just finding where that strength is. Perhaps it does make active trading a little bit more difficult if you're not seeing a ton of stocks cooperating and looking as strong as the indexes look. But it does seem like when we're running our screens, there are plenty of stocks that are compelling out there. It's not just isolated to your mega cap techs.
Yeah, it is. It is a strange kind of. There's a lot of positives to it. There are a lot of stocks that are still showing strength. A lot of the big movers. There's a lot of big earnings movers this week too. It feels like unusually large number of stocks are up 10, 15, 20% or down 10, 15, 20%, or stocks that jumped up 10, 15% and then wiped out the gains or vice versa. It did feel like earnings. So it's
Yeah.
definitely a lesson to investors not to jump into stocks at the first moment. But yeah, there's still a lot of things that are still working well. One issue is that you do try to avoid being too concentrated
Right.
into just a few names because that could set up if the market has a sell-off in say AI names or the mega caps, that could be an
Mhm.
issue. So do try to find that diversity of leadership, even though the market rally is somewhat concentrated.
Right. And two areas of interest, two sectors that you mentioned, software and chips. So let's take a closer look at those. Here's the IGV ETF representing software. If you take a look at the week's action, up about 0.9% off highs. And it seems like for the last couple of weeks as a whole, this sector mostly keeping pace with the S&P 500. But Ed, it sounds like you're seeing some interesting names underneath the surface here.
Well, I mean, Palantir is the biggest name in IGV now because it's been, and that one had a really strong move that had earnings. That's really extended, so that helped. AppLovin is in that ETF. Big move there. Oracle's one of the bigger names. Not a big move, but it rose. But there were definitely a lot of losers in this sector too. I mean, especially in the week, like there was uh, ServiceNow, Twilio, Salesforce. Fortinet had
Mm.
earnings. Twilio did too. So there was a lot of weakness in this
Yeah.
sector too. So it's just something uh, out there is that I think so. I think IGV maybe overstates the strength of the sector given how well Palantir has been doing and a few other names. But so that's just one area that's for whatever reason has just fallen a little bit out of favor. Again, boo-hoo, it's just a couple of percentage points off all-time highs. I don't want again, I sometimes look at the glass half empty, but there's a lot of reasons to look at this half full.
Yeah. Well, as active investors, luckily, a lot of us do like having somewhat concentrated portfolios. And Ed, we do like to say how important it is to really try to find the leaders in the group. That's not going to prevent investors getting caught in every or any gap downs on earnings, right? It happens to the best of us. But if you are continually trying to adjust your portfolio and find those leaders in a sector, versus, hey, I need software exposure. What's kind of your buy point right now? If there's other stocks that are looking stronger, just trying to make that assessment and try to get in the leaders. Of course, ideally at proper entries for those, but something to think about with the portfolio management there as well.
Yeah, and I do think that you need to be into the market. Like this is why you try to get into market rallies early. Like
Yep.
once we've had a follow through day and you see those stocks moving out, those early leaders can often be the big leaders of the rally, and the opportunities can sometimes there have been follow on opportunities for Palantir and some of the other names, but it just can become a little trickier. So just make sure to be looking for those correct spots along the way and
Hmm.
try to get in there. If you're aggressive, in a sound way early on, that can make things a lot easier if
Hmm.
things just keep on running.
Yeah, and leadership can shift in a group, right? And we'll take a look at a couple of names this week that presented some actionable opportunities. Couple more ETFs to check in on, though. First, here's a look at SMH representing the chip sector, up about 0.8% on Friday for the week, up 3.4%. So that's a pretty good move here.
Yeah, there's a lot of strength in chips, a lot of positive news for chips, and this is doing quite well. There's individual names, a few that flashed by singles, but you could have probably used, this is probably one way to get into it. If some of the other names are too extended, this is one way to play the chip sector.
Hmm. And XLI Industrials, let's check in there. What are you seeing here, Ed?
It's just sort of like the Dow or the Russell. It's just some names are just pausing right here. I mean, it's just this is fine. They're not. But after that pop up on Monday, it's just moving sideways. I think we're seeing something similar with XLVF as well.
XLF, we'll go over there. Yep. So yeah, not as impressive as
Yeah,
of a recovery, and got hit a little harder last week
it did.
too.
And so
Yeah.
there's definitely some names in there that it's you know, and Berkshire didn't help this week. There are definitely some names that got hit this week that are in this group. Uh,
Mhm.
but so a lot of sideways things. There was a lot of the areas where it went up Monday and then we went sort of sideways.
Mhm. And one more to check in on, which we haven't in a while, and that's the home builders, XHB, still trying to recover off lows here, but it looks like it was a pretty good week for the home builders, up 4.2%. So making some progress after a lot of time sitting out.
Yeah, we'll see if that goes. I mean, there's growing expectations for rate cuts, which
Mm.
might, and not necessarily, but might help on mortgage rates, longer term rates. And it's obviously been down so far, but it's just something to note. Is this a sector that might come up? A lot of stocks still need work. A lot of stocks in this group, they tend to follow, they tend to track each other pretty closely, honestly. So a lot of them have been coming up through their 200-day line. So that could be something that investors look at. Is this a sector that comes on? But obviously, it's been lagging for a while. But this is a group that can be the worst group out of 197, and then be the best the next year. It really can
So
go.
true.
It did do that a few years ago,
Yeah.
where it was the best and then the worst. So uh, it's definitely something that investors should be just checking out to see if they want to take part in that.
Yeah, some rotation percolating here potentially. So we'll keep an eye on that. All right, let's take a look at some stocks, Ed, starting with Google breaking out over the 200 level, a handle entry, which you've been great about pointing out. We do have an official handle on the weekly chart here. So Google starting to outperform the S&P in recent weeks, it looks like.
Yeah, when it cleared the daily handle, which looks like it's 3 weeks out on the weekly, but it's like the relative strength line really hadn't made any progress. Let's be clear, it was pretty laggard, and so that can sometimes, not, well, it's not slow growing, but not as fast growing,
Mhm.
and sometimes that can happen, and that sometimes goes, but it's picked up, and the relative strength line has definitely made progress since there. Strong growth, strong growth still continues on the earnings side. It was just nice action. This is also one that's not as volatile, as a lower ATR. It's just something, this is probably, that's not going to be probably the number one stock in the S&P 500, but it's making a nice move here. It was joined leaderboard swing trader, and it was our stock of the day. So definitely worth looking at here. Again, I think people get worried about it more than the other hyperscalers. Will AI and chatbots destroy their
Hmm.
business, even
Mhm.
though people, like their AI chatbots, but they still think it's like at risk. But to be honest, it hasn't happened yet. Let's just put it that way. Their search business is doing well, and their cloud business, helped by AI, is doing well too. So I think that's one reason there's been some skittishness about that. Maybe that's fading a little.
Yeah, all good things to point out. So a lower average true range, which you mentioned, a little less volatility there. All the big volume spikes we are seeing on the weekly since the April timeframe are to the upside. So seeing some signs of accumulation there. And if there are concerns about breadth, and if QQQ versus QQEW, hey, this is one of those mega cap names, Ed.
Yeah, and most other names are out of position. Let's be clear. And if you're not doing like some kind of ETF for like either doing the Qs or something even more concentrated, this is one of the names that's actually in range.
Okay, well, we'll have to see if the momentum can continue. Prior high from February is 207.05. Shares closed this week at 201.44. Let's check out another mega cap name, which you mentioned earlier, Apple. Best week in quite a while here, Ed, up 13%, retaking a key long term moving average. So is Apple back?
Yeah, I mean, it was a game-changing week. Now, is it just resetting things and now things will normalize? But essentially, it seems like Apple is going to be able to avoid tariffs, or at least significant tariffs, on the iPhone. And for a while there, it was looking like, boy, wherever they went, China, India, it was going to be huge tariffs. And so that is a huge headwind taken off. Earnings estimates are creeping up a little bit. They had a pretty strong report. They did pretty well in China this last quarter. It's not stellar. When I talked about Google slowing down a little bit, Apple's even more so. And so there's a lot of things here. Not only did it cross the 200-day line today, but it also, you could say, you could draw a trend line. So I sort of feel more like this would be, if you were interested in getting into something like this might be the kind of place to do it, either here or wait for a few days, see if it forms some kind of handle or
Mhm.
pauses around here, rather than wait till it gets to the high. Because it's sort of like me running at my age. It's like, if I run up to the top of that hill, I'm not running any further. So
You're pretty fit, Ed. But yeah, this
yeah,
this can be a bit of a sleepy stock. So looking at a longer term moving average does seem like a compelling strategy for something like
that would be the thing. Again, it doesn't have to be, and it may not work, but that would be some. I just wanted to bring this one because it was such
Mhm.
a big mover. It was probably one of the it was clearly the biggest mover on the Dow, I think, and
Yeah.
a big factor in the market.
Yeah, big factor in the market this week, no doubt. We'll definitely keep tabs on it. So, the tariff issue, at least for now, resolved, it seems like. Next, what investors are going to be focused on, usually in the September timeframe, right, Ed, is when we get some product announcements for Apple. And so, I think one of the issues that investors and analysts alike have been questioning is Apple's AI strategy. Can they pick up the pace with that? Because it seems like they're a little bit behind versus some of their mega cap peers.
Yeah, I think that's definitely a big issue, and because it's like they really need to provide that that driver because everybody else is doing it, and their competitors, especially in China, are doing a lot. And just more like the relative strength. The relative strength actually undercut. It was like a 3 or 4 year low up until this last week. So it's really was getting down there. So
On the ropes.
on the ropes, it's bouncing back. But yes, I think AI is a huge issue. And will they have to buy
Yeah,
somebody to do that? Some people are saying, well, they should
right.
buy Perplexity or one of these other AI startups because
Mhm.
they haven't been able to do it on their own or they haven't made the partnerships to make it work. So yeah,
Yeah.
that's a big factor going forward.
Mhm. And Meta's poaching their talent, right?
Well, when
So,
you provide those kind of salaries, $100 million salaries, it's hard
hard to
not to be poached.
yeah, exactly. All right, let's move on. You also mentioned which is AppLovin, a standout in the software sector this week with an impressive earnings reaction. Full disclosure, I do own this one as of yesterday, crossed the 400 level and then broke out above the 428, 429 area. Lots of volume coming into this one, acceleration of growth and triple digit growth, another quarter of triple digit growth on the bottom line.
Yeah, so really strong growth, and I think there's some discrepancy on the numbers just because of but that earnings growth is basically in line. The sales growth might not be as much because they've done some sales, and so there's certain things that are messing with it. But strong. If you look on a weekly, yeah, if you it's not at all-time highs, but except for that one last spike where it's sort of there. So there's not too much overhead resistance anymore. I mean, I just sort of like there's some people who bought up there who might still want it, but most people are there. Uh, I think this one is on an intraday chart was really important. This is why you want to have watch list ready and you want to be engaged because okay, it started off at up and actually the prior night it was down at 1.67% and it was like but it opened higher, sold off. So I was like, this is not so great, not so great, so that would not be, but then it picked up and it's right at that 400 level. And that's when it's very quickly. So if you had
Mhm.
alerts set, if you were paying attention, there were opportunities to buy it, 400, 405, 410. And believe me, it was moving very quickly to do that. And even when you bought at that highs there, it was still fine because it was in the buy zone. But this is why you want to try to
Mhm.
be paying attention. Wait a few minutes. In this case, it would have worked out no matter what. But uh, you want to be engaged and ready so you can pounce and get the best entry possible. Because you didn't know, like this one easily could have fallen 5%
Yeah.
today, and if you bought at 400, you're much safer than some of the other than buying
Yeah.
at the traditional buy point.
Exactly. And in terms of being ready, IABD Live, of course, we're covering the action in real time, but also, Ed, I know in your coverage, you're really great about pointing out stocks that are setting up with earnings due, along with the rest of the staff. But always like how you help us get prepared for the trading day ahead. So that's another thing, whether you're screening for stocks, looking for setups, or looking at our coverage at investors.com, we're trying to stay in step with the market and help you keep your eyes peeled because I mean there are a lot of earnings reports in a very short time, right? And it felt like last week was supposed to be the really big high profile week, but this week there was just as much if not more that was really interesting and moving big.
I think there's more for like growth investors because there's so many
Mhm.
of these names, individual names, and so maybe some of the mega caps are out of the way.
Right.
But yeah, and I will say, yeah, like yeah, this happened on IBD Live when I was hosting IBD Live on Thursday, and I noticed that it was just going so quickly. But even if I hadn't seen it, the audience was paying attention. The audience often gives us a lot of great. It's like no, it's like this is moving. It's like this is breaking out. I saw people saying that Google's breaking out. It's like oh yeah, I guess it is today. And so
Yeah.
that audience is really helpful as well.
They sure are. Okay, we've got a lot of other stocks to get to. So, how about sort of a lightning type mode, Ed? Is that
Yeah,
what you're envisioning here?
that's
All
that's
right.
that's really it.
Okay, just to give us a little bit more color of what we saw go down as the week progressed, here's a look at chip equipment maker Lam Research, which had earnings a little while ago, July 30th, and now bouncing back this week up almost 6%. So a strong comeback.
Yeah, so it bounced off, like, so the earnings reaction wasn't great, but there were pretty good numbers, was pretty good guidance. There were some reasons why it fell, but it rebounded. It cleared most of this little consolidation. You could treat that consolidation as a handle to a like a 13-month consolidation as well. Either way, there's lots of reasons why you could have bought a 10-week line, trend line, or just within the handle. So again, you could have bought SMH, but this is a chip name that was actually in range. It is involved in AI like almost every other chip play, but strong accelerating growth. And that's another thing that's really nice to see.
And getting above that 100 level, that century mark. Now, a similar setup, very different business. And this one came down to the 21 day instead of the 50-day. But that is Robinhood. And full disclosure, I did pick up some shares on Thursday, but came down and found support at that round number of 100.
Yeah, if you want to get into some of the leaders, this is a chance. You got to look for some of these things because this market isn't really pausing. If the market went through a long phase, you might say, well, wait, I want to see, a base, but honestly, they're just not stopping. That was a great time to be picking up trend line, getting above the bulk of this little consolidation. And the market was looking really strong. Then the market reversed, but not Robinhood. And again, really a strong performer here.
Next on the list, let's take a look at Shopify. All these tickers picked. You're a picker, a stock picker. All these tickers picked by Ed. I do own this one as of a couple of months ago. Another standout earnings move this week was from Shopify.
Yeah, and it basically had an alternate handle at 129, but it gapped up. And regardless, that really didn't come into play as it turned out because it gapped up. Could have bought it. You could also just wait, like if it pauses for a few more days and sees if it moves here. That's another way to play it. Just really strong performance. They've turned tariffs. Either tariffs haven't been a big issue, or now customers need to rely on them even more. It's like I don't know how to deal with all these tariffs. Their software, I'm sure they're very well suited for that.
Okay, let's also check out Toast. Fell apart this week. Broke out a couple of weeks ago after some attempts of doing so, but the earnings reaction this week ultimately an earnings loser, I would say. Ed shares down 7.7%.
Yeah, and this is tricky because okay, I can understand if you like on that first day when it sold off, it did come back. And so you
Yeah.
could have, I could have understood keeping some of the position or even all of it. But it did hit resistance around the 21-day line. And, then it came back down. And today, I think for sure at this point, it's clearly below the 50-day line. I mean, by any measure, I think you should be out. You probably should have been lightening up anyway, but
Mhm.
that's just something. Sometimes you get a bounce, but that bounce doesn't last, and it clearly came up to some key levels. Just disappointing, but and maybe this sets up again. But yeah, just that was an earnings loser for sure.
Here's a look at DraftKings, a bit of a volatile day on earnings, and today lower by about 5%, bringing the weekly decline overall to a little less than 2%, but an outside week downside reversal closing at the lows. Not what we want to see.
No, and if you look intraday, this is again, there was a lot of these names, and you can see Thursday. Okay, it opened lower. I mean, this looked it all over. So the first 5, 10 minutes, it was all over the place, but then very quickly it fell. I mean, and it shored up a little bit, but if you just waited a few minutes, it's like, well, wait a second, because that,
Mhm.
and it would have been fine. This, if you'd waited, then you probably wouldn't have gotten into it, and then you would have avoided today. But maybe if it bounces today, what if it bounced? Well, you still could have bought it today if that had worked. It wasn't like it anything. Again, you're just talking about playing the odds, protecting yourself, just avoiding. There was a lot of that. The market reversed lower. Um, and but really some ugly action there. Uh, what had been trading pretty tightly here.
Exactly. Definitely changed its character, widened, got a little volatile, and now a firm close below that 21-day line. Moving on, two more. You mentioned some stocks pop and drop. Well, Expedia, definitely an example of that, had a very strong open, closing up just 4% today in reaction to earnings. And this is another one, just checking out that intraday chart, waiting a few minutes, probably would have saved a lot of traders.
That's all. I mean, that's really what it comes in. There's a lot of these stocks, and Expedia may end up fine. I mean, I don't know. But there was a lot of names just today where they went up 15,
Mhm.
20% and then had really small gains. So there's that.
Yeah. And last on our list, let's check out Sezzle, which was such a hot stock in the May June period, even into early July. Started basing, but went from sizzle to fizzle. Today, down 34%. So, what a difference a quarter makes here, Ed.
Yeah, I mean that's just. I mean, obviously people should not have been in it if they were recent buyers that had fallen below the 50-day line. I understand if you were holding this for the long run and you had bought it at 50 or somewhere that breakout, you could have held it all into earnings or most of it. But yeah, that can just happen. I just want to can't stress enough is like we talk about the big names went up 20, 25%, but just remember this happens too. And it really seems to have been very common this past week.
Hmm.
And yeah, there's just a lot of volume. There's a lot of the fundamentals have been pretty strong. I think the fundamentals were strong in this last quarter, but stocks often top out well before the fundamentals clearly deteriorate.
Hmm. And something that we're talking about on IBD Live here and there is just looking at a stock's character and when that character changes. So from that May June timeframe, it was holding well above the 10-day moving average, only touched the 21-day line once in that time period, but then it started breaking below that level. So seems like maybe in hindsight, as someone who wasn't in this, maybe that was an opportunity to trim if you didn't want to take profits into strength, into those
Yeah.
highs. You did get somewhat of a signal to at least lighten up, like you said.
I think so. If you could go back to just go back to January. I just want to because I want to show the pattern. This sort of did this before late last year, but if you just go to January, that will
Mm,
it had this
mm,
big run and then it sold off. So it didn't look so bad on that chart we just looked at, but all this was a huge decline. So it's definitely in its pattern to do this. Now maybe it'll set up again and all that, but there were definitely sell signals on this one before and then it came back around. So yeah, definitely have to know this one's character. While this was a huge drop, it was surprising, not shocking to see
yeah,
that decline.
that's such a great point. That's the stock's personality. Okay, Ed. So, with all of that being said, let's wrap things up for folks. What should they be thinking about to prepare for the trading week ahead?
We may be seeing a lot of handles and other things form. I mean, the Nasdaq's hitting the high, but there's nothing wrong with writing a lot of your winners, trying to find that. Uh, there may be maybe if you squint hard, some underlying, some weakness underneath, but really not that strong. Earnings season slows down a little bit next week. We do have some big economic data, including the consumer price index. But yeah, this rally has been doing very well, and I think that investors should be fairly heavily invested and still looking for opportunities to add or
Mhm.
supplant your other positions.
Definitely on the same page, Ed. Thank you so much for your spot on analysis, as always. We appreciate it.
Thank you, Ali.
And thanks everyone for tuning in. That's it from us for this week, but we will be back with more on Monday morning on IBD Live, investors.com/IBD Live for all the details. We've got a jam packed week coming up next week. Monday, we have our monthly market report with Jim Ropel and myself at 5 p.m. Eastern. We look forward to seeing you there. Also, Tuesday, 5 p.m. Eastern, we have our monthly swing trader status update show. Usually those are on different weeks. Usually monthly market report is the first Monday, swing trader the second Tuesday, but due to scheduling, we have them both in the same week. And then Wednesdays, of course, we've got our weekly podcast. And then, as Ed mentioned, it's still earnings season. So every Friday morning, we will be dropping a new episode of our earnings cheat sheet show with Ed and Lexi. So, as always, a lot to look forward to in the week ahead. And we appreciate everyone for joining us. We hope you have a great weekend, and we'll see you back here next week.